Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. Welcoming you on in. I am joined by David Stein. And today we're going to be talking about the silver mining side of the silver market. And with prices lower than seeming fair value to many out there, excited to have David Stein of Kuya Silver joining us today on another day of prices on the lower side for silver. So, David, glad to have you on in here. And how are you today, sir?
I'm doing fine, Chris. All things considered, thank you for having me.
Well, good to have you here. And certainly, actually, before we dig in even to some of the news and the supply side, maybe you could give us a quick 1 or 2 minute version, because on behalf of Kuya, you recently kind of did the equivalent of buying on the dip on a company level, which certainly I know I was buying options on silver miner options on the dip on a personal level, which of course is not licensed financial advice. But David, could you give us a quick rundown of the recent deal, and we'll come back and maybe take some questions on that before our time is done today.
Yeah, you raise a good point, Chris. Last week we announced that we had acquired some ground right around our mine in Peru, around the Bethania mine. So pretty, very, very strategic acquisition for us. And basically we acquired 1,800 hectares of additional land. But, in particular, among that, the most important part of it would be there's several hundred hectares immediately around the Bethania mine that we acquired. And also we have now sort of a contiguous land package going from Bethania all the way to our other target, which is Carmelita, which we've mentioned earlier, which is a historical mine that's only 3 kilometers away from Bethania. So we now have a much bigger land package. And I think, more than it just being bigger, it's much more highly prospective than what we've had in the past. It's having stuff immediately around the mine is very, very exciting for us, because we know where our mineralization is trending and we know where we can explore. And so these are relatively easy targets for us to follow, and we're really excited about it.
Well, I appreciate that, David. And, I get it that there's some people that wake up, they see the price down, they're frustrated, rightly so. Although having been there, and I mean, as you do that long enough, and eventually you're in year 4, year 5 of getting ticked off every day, and I think hopefully we switch to, all right, given the way the world is, how can I interact with it, use this to my advantage, and I think that you're doing that. Let's take because it's not the easiest environment to mine for silver, obviously, but let's take a quick look at the silver price before we dig into what options some of the mining companies do have that they can respond with. Here you can see quite an interesting chart. Apparently the volatility in the silver price has settled down today right around the 2350 level, where you have a lot of stop orders placed. And David, you can tell me if you know of anything on the supply side. I'm guessing that this move here in the midst of 5 regular non-transitory 5% plus inflation prints, a government in the U.S., I don't know if I'm allowed to make Canadian government jokes, doesn't sound like it's going much better there, an empire that looks like it may have finally run out of cash, yet shockingly, right leading into options expiration, which was yesterday on the COMEX, you see this dive, which kind of fell in line with the option structure as I've detailed in previous months. Was this more just meaningless paper shenanigans, or was there a big shift and someone found a new truckload of silver yesterday out there on the supply side?
There were no truckloads yesterday. In fact, if anything, there's been some recent supply disruptions in silver. Obviously you don't see it affecting the market as the silver price continues to go down, but yeah, there's been no new supply coming on stream.
Okay, because certainly if we look at the gold chart, we see that that same dynamic would have had to have happened there. Outside of that, as best as I've been able to figure in my 20 plus years studying the financial market and 12 in the gold and silver space, otherwise this would be just like Bart Chilton said it, where you see the metals simultaneously hammered at the same time, same chart pattern there. Now, probably completely unrelated to this is that JP Morgan just last week, so you can even read this one in 2 minutes. Look at that. They agreed to pay $60 million to settle a precious metals spoofing lawsuit. Although, David, why don't we hold off on that for now?
Okay.
Because I think that ties in, but I know we promised staying on the specifics for the supply side. So as the price is going lower, that's not making it easier for, I mean, there's not many people who are able to do what you're doing. Yes, David is a sponsor. I'm biased, but I don't think it's an easy thing to go pull silver out in this environment. And we've seen as the price came lower over the past decade, either the companies cleaned up their balance sheet or most of them aren't around now. So anything you could touch on there?
Well, look, I think when prices are higher, two things happen. One is it's easier to raise capital in order to do expansions or build new mines. And then second of all, if you've got an existing operation, then you've got an incentive to produce more at the time. What I think we've been experiencing now, and frankly for most of the past several years, is more of the opposite of that, where it's difficult to get to finance growth in the mining space, and you're not, there isn't a whole lot of incentive to produce a lot more. I mean, unless you've got to pay debt or there's some sort of gun to your head to do that. So. I mean, I think it's a very positive setup right now for a shortage to occur with any onslaught of new demand, and it will take years for the industry to respond to that. So regardless of whether we go to 30, 40, 50, 100, it takes years for the industry to respond with more silver production. And that really won't change no matter what the price is.
Okay, which is consistent with what I've heard. Let me ask you a similar question like this. Let's say between now and a year from now, silver went up to $100 for the next year, and there was mania, everyone was excited, even silver bugs were smiling. How much extra production do you think we would have, even if everybody went full in, but just over that first year alone, to put it in perspective, in roughly a 1 billion ounce per year market?
My guess would be at most you'd see a 5 to 10% increase overall. That would be my guess, and you might not even see any growth. It sort of depends on what some of the bigger projects end up doing. It also depends on what the other metal prices do, because a lot of silver is produced as a byproduct of copper and gold production. So it's really hard to say. That the only incremental production I could see coming on really quickly would be artisanal miners, but you could have like hundreds of them in Peru and Mexico and elsewhere coming on, and if they all produce 100,000 ounces, you could get a few million ounces that way. That's about it.
David, are you subtly implying some sort of field trip to Mexico and then Peru for all of the Arcadians to come along with Plata Silver Puppy and dig for some silver in the artisanal fashion? Because I'm ready to go. As you can see, I even moved the camera so you can see the beach behind me where the sand actually sparkles. I've been told it's primarily mica, yet I was directed here by Jorge Ramiro Monroy from Reina Silver at the behest of the legendary Dr. Peter McGaw. So when are we doing a trip of your mine in Peru?
Well, look, I think sometime in 2022 it would be possible. Obviously, this year's almost done, but let's see what we can do next year, Chris.
I mean, just because in case you need someone to guard your vault, I mean, you can just leave me there and go sailing for a while, and I'm sure it will all be there. Although you would still have a better chance with that plan than leaving it in the LBMA system, because David, what I'm still flummoxed to extrapolate and understand here is, I'll scroll up. I know some people might think I'm making this up. Silver Investment Report 2021. This was legendary from the LBMA, written by Metals Focus. And you've talked about the supply side. So even if you got the higher price, there's not much supply coming on, which leaves me confused. You know, now that we're getting late November, couple months, is almost, you know, past half a year, 9 months since Silver Squeeze, which I would say if Silver Squeeze on a scale of 0 to 10, with 10 being the knockout blow to the COMEX, was maybe, I don't know, in the 8 to 9 range. Not in my opinion, but let's read this paragraph here. The implications of another surge in ETP demand. As impressive as the global ETP holdings that hit 1.2 billion ounces in February, as impressive as that may appear, it doesn't tell the whole story. That I'd agree with, because if they just take in customer money while they're hammering futures on the COMEX, like LBMA sponsor Goldman Sachs commodity chief Jeff Curry eloquently described, you know, that's like the guy who puts 5 Ferraris on his neighbor's credit card. But we'll leave that aside and look at, as the social media frenzy gathered pace in late January. Now, David, I didn't know this was coming. My intuition led me to put option positions on somehow, which I feel fortunate from, but I didn't know of Silver Squeeze in advance. And interestingly, Wall Street Silver, if you look on their Reddit page, started January 29th. So all of this happened kind of spontaneously. Yeah. And global holdings surged 119 million ounces in just 3 days, which then the same LBMA later admitted that they miscounted, which would fall in line with what I said that first week of February, that no one on the planet that I could find that would actually allow into my house, so obviously Jeff Christian's excluded, could explain how that was even possible, leaving us in a situation that, given that most metal was allocated in London, fears emerged as to whether there was enough silver should demand continue at that pace. Now, I'd say that since February, you know, that was the peak. I mean, we've come down, but it's been months of still elevated buying, as folks will find out in tomorrow's weekly Endgame Investor Silver Report with Rafi Farber. Coin premiums actually just recently spiked, which happened before many of these other times where the price spiked. So if these guys basically said they got their teeth kicked in back in February, and I mean, it hasn't been that intense every day, but it's still been, I would say, probably a record-setting year if you talk to most dealers. Where does this leave us when you match that with what you've said about the supply side?
Well, you know, I think the coin premium thing is really important, because at the end of the day, you know, if people can get their silver at the current price, then there must be the supply for it, right? But as soon as you start seeing the premiums go up, then, you know, I think that tells you that something significant could be happening. That's my opinion.
Would you say that's kind of like the canary in the coal mine, and there's a reason why you don't see coverage of that on CNBC? You don't see the Wall Street Journal. I mean, they don't even know how to spell silver, let alone cover the premiums. But for the people who are looking and have seen the evidence, they've seen that letter that was sent to Ralston Benham asking him to explain why him and his banker buddies capped the price. Are there other times when they've capped the price? In fact, David, silver got to $29 in February, or it got over 30 in February, but remember, it's the year before when it finally broke through 21, it shot right up to 29. Was that another time when they capped the price? But even though the regulators brag about their fraudulent transparency, for the astute investors that go straight to the source, the people who are mining this and seeing it, would you say that if you're looking for the signs that they won't tell you, that the increased premiums could well be one of those to keep an eye on?
Yeah, I think it definitely. I think the premiums are important. It's not the only thing to look at, but it is really important. I think going back to that paragraph that you just cited, Chris, and in that LBMA report, what's pretty interesting to me, because I remember it wasn't that long ago that we lived through that. And I was probably even on an Arcadia panel at some point over that brief period of time when we had the silver squeeze. And at the end of the day, when you actually go back and think about it, it was just a matter of days. The whole thing happened. Like, it was a very, very short period of time. And in a way, it's kind of funny that we still obsess over it, in the way that we do, because honestly, 3 days of buying or whatever it ended up being is nothing compared to what a real bull market looks like in silver. And the conditions that set up the silver squeeze were very unusual, in the sense that essentially you had the GameStop guys, and GameStop was going crazy in mid-January, or just basically right before this happened, got up to $400 or whatever. And then some of those Wall Street bets guys started to branch out and into other stocks, and silver came up as one of the ideas. And then that's sort of when it became a thing for a few days, and then we woke up in February, first week of February, and it was all over. So I think it's just worth reminding people how while that was a very interesting week or so, and it does tell you something about how tight the silver market is, we could have that in a real bull market. We could have that for week after week after week after week, and I think that's what people need to just keep in the back of their minds. I'm not saying it's going to happen like tomorrow or whatever, any time frame, but we've had real bull markets in precious metals, and especially silver, and they are very, very powerful. And it's probably going to be nothing like anyone's experienced before when it does eventually happen.
Yeah, I would agree with that, David, especially when you factor in that if you just flip a paragraph forward, perhaps you could read the highlighted quote right after the fears emerged as to whether these guys were going to be exposed as the traitors to their country and the global financial system that they are. Can you read this highlighted, how they could follow up a gem like that?
This suggests that had demand in iShares continued at the frenetic rate of late January, early February, it would have only been a matter of weeks before London's existing stock was used up.
Well, that doesn't sound good, especially if you're one of the banks that is short a lot of metal. Now, despite they like to deny that, when they changed the prospectuses for SLV and SIVR and the other silver trusts on February 3rd, just a day after this, of course, just 2 days after Austin Benham opened his silver investigation, they actually specifically in the legal contract language that they didn't tell me about when I called iShares on August 5th, which that could be multiple felonies in and of itself. They didn't mention, they did in the part they hid mention short position. So at the end of all this, David, where, you already had this situation in February, the price is $6 lower than it was then. So that means it's harder for you and Keith Neumeyer and the other guys to go get the silver out of the ground. And if it was that close to blowing up in February, and we've had steady demand that I believe would be record setting compared to just about any other year, is it possible that these guys could be very close to getting knocked out for TKO'd? What if people said, hey, well, why don't we study what happened last time, if just from a simple marketing exercise? If some of the bullion dealers said, all right, well, nobody knew this was coming, and this almost knocked these guys out and stopped them from stealing money out of the mining executive pockets, stealing money out of the investors' pockets, from Ross Benham stealing money out of your shareholders' pockets. I mean, could we be close to them just finally being blown out into oblivion so that the world can actually experience life without that level of fraud?
Yeah, I do. I think we are close. I think another thing that sort of helped manage the inflow, the illiquidity, was the fact that um, you have these trusts. A lot of the buying of silver was not physical silver; it was in these basically exchange traded products, and so I would say if you had something similar happen and you had a bigger, if you start seeing a bigger impact from physical, then yeah, that would be a lot bigger impact on the market going forward.
Yeah, it will certainly be interesting to see how that shakes out. I'll pull up one other chart here I've been meaning to share, because here's the funds like SLV and those other paper junk ones. By the way, fellas, you don't want to get your wife paper silver for Christmas. Trust me, they physical only, because you see here in this true piece of garbage sponsored by BlackRock and JP Morgan and a bunch of other weasels like Goldman Sachs, right there in February, you see the massive holdings that many of the guests on the Arcadia show pointed out were possible that it could have gone in. This was months before the LBMA admitted that. But look, David, up here, this blue line, that's showing that even despite 5% plus inflation prints that were supposedly transitory, even though 2% was their target. I mean, when is it non-transitory? Yet through all of that, basically you saw a massive run up. Here's COVID back in 2020 when the price of silver dips to $12. You see a ton of metal go in until it suddenly stops there. Even fraudulent Ross Benham acknowledges on YouTube to his commodity buddies at the Boca Raton Futures Conference, hey, we're getting our face kicked in. We had to use all of the fraudulent measures possible to keep stealing from the investors. And sure enough, right after that, no metal goes in. This looks like a coiled spring to me, David. Obviously not legal financial advice, and I know you're running the company, so feel free to pass, or if you have any comment on what might have accounted for the metal, demand just stopped, Was this Jeff Curry hedging on the COMEX, or what do you think on that one?
Well, again, going back to my personal experience in living through January, February of last year, I think what we saw was, a lot of more the trader type people would have probably gotten out in February. And then a lot of other people were, like myself, would have been switching into more, let's say, call it trusted ETF type holdings like Sprott, for example. So obviously that doesn't make an impact in the total number, but I think it is a positive thing in terms of taking supply off the market. And essentially, this total number of million ounces of silver doesn't tell the whole story, because obviously there's some that can be kicked back into the market really easily, and there's some that can't. And so I think the quality of the investment demand in silver has been improving in the last year, and I think that bodes well for the next bull market whenever that begins.
Well, that makes a lot of sense to me. And David, here's a little bit of a tougher question. Again, you can pass if you need to, although I think this one is relatively safe here, but it's one that I get from a lot of investors. I guess you're at a different stage company-wise than this might apply to others, but here I mentioned, I was asking people what they thought about the letter that I wrote directly to the head of the chief regulator, who's part of the plunge protection team, the working group on financial markets, meets with Janet Yellen, meets with the felons and front-running Fed governors that are Goldman Sachs executives as well, saying, what did you think about the letter to CFTC Benham that I also sent to the silver mining executives of the companies that have been victimized by the manipulation that Rosti, the Bosti, allows the CFTC to facilitate? Yet he won't respond. Hopefully later this week, I'll be able to share my communications with the press director of the CFTC, because those were special. potential. But here, Joe Boy says, why aren't the mining executives already outraged by this? I've talked to some of them, but let me pass it over to you. You're not producing silver yet, but any comments, or if you want to touch on some of the non-primary silver miners, anything that you'd like to comment on there?
Well, maybe it's because we've been beaten up so long that we're somewhat accustomed to this, and so it's maybe not a case that we're not outraged. It's maybe that we just have other pressing issues that we're dealing with. But look, I think we all want to see higher silver prices, and because it benefits all aspects of our business, and it actually really does trickle down to helping people, helps our employees, and all the communities that rely on mining, that are outside of the big cities, whether you're in the United States, Canada, Peru, Mexico. There's a hugely positive story here if we can get higher prices, but anyway, in the meantime, we just continue to plug away, and with my company specifically, we're myself and my team, we're working hard all the time, no matter whether the silver price is $18, $20, or $25 or whatever. We're busy developing our project and doing exploration, making our resources bigger, and that's sort of where we're at. And then of course, once you're a big, if you're a really big company and you have, better access to working capital through your cash flow, your mines, then you have a lot more flexibility as to what you can do or not do with respect to selling silver, and maybe putting a bit more pressure on the market.
Yeah, David, I appreciate that, because it's in line with most of what I've heard, most of the executives, where it's like a lot of them, they're focused on running their business. I'm fortunate I had a background directly on a trading post, so there's certain things I'm more experienced to be able to see and have focused on. And with that said, I would mention, and I personally thank you, you've been one of the people. You are Kuya Silver, you're running Kuya Silver, and you personally have been one of the people supporting my research and allowing us to continue doing this. So I would say that you've been doing it on that level. And then, as you mentioned, and perhaps a good time to dig into the recent acquisition where, A, you found someone who has fun chasing after the banks, and B, you're also buying on the dips. So I have the press release pulled up here. Why don't you walk us through this? And folks, for everyone watching at home, if anyone has questions on the deal, why don't you start firing those in now?
Well, if you scroll down to the map, Chris, that's probably the best thing to look at. Actually, you can even click on it, it makes it bigger. Yeah, there you go. So well, we're developing the Bethania mine where the Star is, and all the red pink area is the new area that we acquired, and then the yellow dot is Carmelita, which is the project that we acquired in May of this year. So we've been, over the course of the past year, we've been putting together a really big land package around Bethania, and we know that the Bethania, or Kuya, we still have to, I guess, prove it and show it to the market, demonstrate it. But our belief is that the system, mineralizations, the mineralized system is much bigger than what is just on the black rectangle there. So we've been watching and waiting to acquire these properties for a long time. We're very happy that we can now, and we will immediately start to explore there and basically incorporate that into our plans that we've already announced, that we announced earlier in November. And I think in terms of buying on the dip, Chris, I'll just reinforce that one point, because what you made is a good one. These particular properties that we just acquired were done by way of an auction process. because it was essentially open ground that had, multiple interested companies, a lot of interested companies. So the way they essentially break the tie in Peru is they run an auction process. And I think the fact that, the market is relatively, I don't know if weak's the right word, but we're certainly, a long way off from a rip-roaring bull market. That's allowed us to get these properties, I think, a lot cheaper. I think if the market, if we were in a, in a real silver bull market, then we probably would have been paying 3 or 4 times what we paid for these properties. So we're very, very lucky to, we're fortunate to have that opportunity. And now we have them for as long as we want to keep exploring and, making the minimal annual property payments. We can keep these, basically forever. So it's an amazing opportunity for our shareholders, I think.
Yeah, David, I like something you touched on there, because in a world where if you even suggest $40 silver to people, they look at you like you're shooting aliens on the weekend. Yet, if you're of the school of thought that, all right, maybe I don't know when, but I think it has to go significantly higher than that. I've thought about how, if producing silver miners said, hey, we're selling our mines and we're going to buy, out of the money $50, $60 cost of production assets, they'd probably get beaten up by their shareholders. Yet for someone who's a student of tail risk and looks at some of those possibilities, it's interesting, that while the price is lower, you got a much better deal on a package of land where you don't even have to go that far out of the money, but you expanded what you have there. And get anything on that you could touch on?
Well, yeah, I think, Chris, what you're sort of going after there is whether or not there's any value to high cost production or anything like that, which is not our situation, where we're expecting to be a low cost producer. But in the same sense, I guess there's a cost of time, because we're not in production yet. We're looking to be in production later next year. So in a way, we are, there's a similar call option kind of scenario with a company like Kuya. It's just instead of it being high operating costs, we have time and I guess additional risks to the fact that we're not in production right now. So I guess what I'm saying is, I think we're both saying the same thing, maybe in different ways. But if you are to buy, and I won't even say Kuya, but if you are to buy, a company that is, going to be producing soon and still has a lot of risk priced into it, i.e. a very low share price, low valuation, and then we do have $40 or $50 silver, well, I think you'd see a pretty incredible gap in terms of the new valuation versus the current valuation.
Yeah, and hopefully I'll have some call options on when that occurs. David, we have a couple questions coming in. The first one you touched on a little bit there, but Chad Lickenstein says, what is your timeline? What stage is the company in? Any details you could share on that?
Sure. So we have a past producing mine on our property where the yellow star is, called the Bethania mine. And our plan really is, since the beginning, has been to make some improvements to it and put it back into production. So that's still the plan, and we're looking to do that and be back in production later next year. Would be the plan. There's a bunch of things we're working on in the meantime to get there, including a brand new mill that we want to construct at site that will lower our costs and allow us to produce more metal and allow us to get better recoveries of the metals, including the silver that we produce there. So that's what stage we're at. In the meantime, while we're doing that sort of mining, engineering related work related to redeveloping the Bethania project, we do exploration at the same time. So we're we're trying to give investors sort of the best of both worlds, where they're getting the exploration resource growth at the same time as the development, de-risking a development project and getting into production, so that we can make cash flow ultimately. That's where we're at.
Alrighty, and David, we have a couple people asking about core sample numbers, drill cores for the new property. Jeff McCarthy says, give me a shovel and 40 million. He's in to help dig it out of the ground, but anything you can talk about the numbers there?
Okay, well, I'm not reading the questions exactly, so I'm not sure if I'll answer them appropriately, Chris, but we announced a drill program in July that we completed our drill program and announced all the results in July. From our phase 1 drill program at Bethania. That data goes into the calculation of a resource estimate, which we are wrapping up shortly, and will announce, of course. And then in terms of the next level of work, what we're doing, we're back on site right now. And what we're doing is we're doing some work right on surface, because all of our veins we found come right to surface. So we feel like we can sample those, we can get a lot of really good data very quickly and cheaply. And then with that new data of where all the veins are, and maybe some new zones we're expecting to find in the Hilltop area, which was another discovery we made earlier this year. And then also now extending off the property to the north and the south with that new property that we just acquired as well. We now have to sort of add that to the mix as well in terms of our game plan going forward. So with all that work that we can do at surface, we will then bring the drills in to start drilling out, more resources, hopefully, in the next several months. But initially right now, and probably for the next few months, we've got a lot of work on surface that we want to do. We've got, I guess if you include the Hilltop veins that we know about right now, without any new discoveries, you're looking at somewhere around 25 veins. Now we won't be sampling all of them, but we'll definitely be doing a lot of them. And then we also repeat everything that we do at Bethania. We need to go and repeat it at Carmelita. So we need to move our crews over there. We need to do the surface sampling, the trenching of the veins that come right to surface. And then once that's done, once we get the data back, then we can plan a drill program there as well. So there's going to be a lot of work going on. Hope that answers the question, because I didn't read it verbatim.
No, I think we got what people were asking about there. And David, another question I had, and then I'll take a look and see if we have any more in there. I'm going to pull up a chart here because I had an article that I saw the other day that here says Thanksgiving travel surge to test airlines as industry struggles to recover from labor shortages, pandemic. I'm confused by some of the pricing action in the markets these past couple of days, because on one hand, they're saying the economy is great, yet we're seeing countries go into lockdown again. And I might remind folks that when this happened last time, silver dropped to $12, and then as we talked about earlier, it was 29 by that July. How do you factor that in? Because they're saying there's the new wave of COVID. There's always a new one somewhere around the corner. How is that? Because it's like you already have this thing as fragile, and they said the whole world stopped when COVID, and now they're claiming that it's coming back. So if that does manifest, how do you bake that into everything that we've talked about today?
Well, I think if you go back to February, March of last year, there was a lot of 2020. There was a lot more of a sort of a panic of the unknown. And I don't think that's going to happen again, at least with COVID. So, well, yes, it's obviously bad to see, some of those countries in Europe, for example, going back into lockdown. And I'm sure that's not good for their economies and stuff like that. But I think, I think in terms of the silver price and all that volatility, I would say it's going to have to be probably something new that would shake the market, if that's even going to happen. Very interesting to look at that chart because it really puts into perspective, the drop in the silver price when you actually look at it over the course of the whole year wasn't actually that much. Yes, in a percentage basis, it was, probably off the top of my head, maybe 30% or so, but then it went up much higher much more than that on the upside. So, I'd take a 30% drop in silver if it meant 100% up after, because that would probably get us towards, somewhere towards the high 30s at least, which would be great for our business, obviously.
You would think so, and certainly it's a diverse marketplace because I'll pull this one up. A lot of opinions out there. Now, I know Ben Bernanke Powell, Joe Biden calls him Jay, which I thought was cute in the press conference. I wasn't sure if that was Jay or just like Jay, as in like Jay-Z, or, it's how these guys are close, and have destroyed any independence between the fraudulent central bank and the fraudulent treasury. But nonetheless, CNBC is fortunately cautioning people to ignore those hysterical Fruit Loop silverbugs who say inflation, because inflation isn't here to stay, economist says. I guess that's singular, just one economist. Although Jerome Powell said that for most of 2021, and we know how that worked out. But here, this guy, now, David, I won't ask you to call him a complete fool. I haven't heard him talk yet, but he's claiming that, this is a continuation. It's transitory. It was on Squawk Box. Maybe he was watching Jim Cramer, who sees signs that inflation pressures are easing, believes the Fed's policy to continue facilitating crime by the investment banks around the world is the way to go. Are people well served if they watch CNBC? Jim Cramer expects the red hot used car market to start cooling down. You actually run a business, David, where you actually have to pay for things, not use printed Fed cash. What are you seeing on the inflation side?
I would say anecdotally, we're not seeing anything go down. We're seeing various expenses go up, and I'm not sure what they mean by cooling down. Maybe not going up as fast. But it's still going up, right? We'll see what happens in 2022, but I certainly see prices seem to be creeping up everywhere, and and it's very inflationary. Like, there's no question about it. The only thing that would knock it down would be like basically a recession, right? Which isn't good either. So I think this kind of idea that we're just going to go back down to 2% and is a pipe dream. It's either going to crash dramatically or we're going to keep having high inflation. That's what I see.
Yeah, which makes a lot of sense, because obviously only a fool would think that it would go down to 2% when they're just monetizing money faster than ever. But hey, as Wall Street's still around, as long as they're there, I'm sure fools will emerge, as we have seen. But David, fortunately, representing kind of like an antidote for Wall Street. So if you don't like having your savings melted down, having the rest of it stolen every couple of years and then ignored until you write a new check, fortunately, you've navigated through all this. You didn't waste your time going to MBA like I did. You were actually learning real applicable things. Now you figured out how to run a company in the midst of all these shenanigans. So can you let folks know where they can find you as I pull up the website, and any other parting thoughts that they should know today?
Well, you did the work for them, Chris. This is the best way to start. To find out and get a hold of us is the website, and you can see there's a sign up at the bottom there for our updates, and you can also contact us directly, book a meeting if you want to hear more from one of us live, one-on-one. And yeah, so we're very, very open, and we've got a lot of different venues on social media that you can tap into as well. Twitter, Facebook, Instagram, LinkedIn. So yeah, by all means, we look forward to hearing from anybody who's got an interest and wants to learn more about Kuya. Parting thoughts, I guess, would be just that. Look, I'm at the end of the day, my background is in investing, much like yours is, Chris. Yes, we've taken different paths to get here, and now I'm running a mining company, but which I founded, and I'm a huge investor in. But I see, number one, a great opportunity to deliver growth in mining. And that's what we're building with Kuya. And then number two, I see the not really an opportunity, but an expectation that we will see higher silver prices at some point in a real precious metals bull market, where gold and silver are going up together, and silver is outperforming gold, and the silver gold ratio is or the gold silver ratio is dropping. That's what we're expecting to happen at some point in the next few years. And our company is really well positioned to take advantage of that, because we've got great assets, we've got near-term production, might even be in production by the time the real bull market happens. So we're here for the long run, and very, very excited, even though day to day it can be very frustrating, but we're very excited for the long term.
Well, that's why you can come hit the pool or the beach in the background here while you wait. Hey, perhaps no one ever said crushing it in the silver market was going to be a flat roller coaster. There are ups and downs, and but I think that's the fun part of trading and investing. Sure, it's easy after the thing happens, but you got to make your decisions before it happens. Again, this is not licensed legal financial advice. You'd have to see if you get Rusty to call you back at the CFTC on that. But David, thank you for joining me, and thank you for your support, certainly of the show, but also doing what you have the ability to do to stand up. I mean, I made my life around this quest in many ways, and appreciate your support of what we've been doing here. And also, again, let me pull up one last time and say congratulations on the new deal, because especially, you can't control the silver price, but on a company level, basically you got an asset for a lot cheaper than it would have been. And since, like you said, you position the company so you can stay in business despite what the COMEX does, I'll be looking forward to seeing how that plays out over the coming years. So thanks again for joining us here today, David, and we'll look forward to checking in with you again soon.
Great. Thanks, Chris. It was a pleasure. And let's do it again sometime soon.
All right, my friend. I'll look forward to that. And we are clear.